Hey, it's Michael Tiny Saul with the Market Autopsy video for the week and the month actually ending Friday, November 30th, 2012. Let's take a look at what economic reports are coming up this week. On Monday, we have ISM manufacturing at 10 o'clock. Tuesday, we have Spanish unemployment change, but that's early in the morning. Then we have really not much. Tarullo speaks. It's tentative and it's only ranked a yellow anyway. On Wednesday, we have the Spanish 10-year bond auction, the ADP non-farm employment change, ISM non-manufacturing PMI, factory orders. That's 2 at 10. I mean, the ISM will carry more weight. Then crude inventory. Thursday, we have minimum bid rate, and then the ECB press conference in the morning. Then we have unemployment claims, the weekly unemployment claims. Then Draghi speaks on Friday morning. We have the non-farm payroll numbers and the unemployment rate. Those are at 8:30. And then we have preliminary University of Michigan consumer sentiment. So, I mean, it's a pretty busy week. All right, let's take a look at the market here. This is the XLF, but we'll go back to that. Let's go to the SPY here for now. All right, so coming into last week, I was looking for a rest here. I thought we were overbought. I thought we could push up a little bit higher, but I would prefer a rest. So what happened Wednesday is we actually got both. We opened, we traded down, we filled this gap, and then we reversed really hard. And then Thursday and Friday, we just took a pause under the 50-day moving average. This is the S&P 500. So what am I looking at now? Well, the first thing I'm going to do is I want to modify and get these out of here. Show you. Okay, so the 62% retracement is just above here at 143, about, in the 143 area. And we have the 50-day moving average here. I mean, this is a really nice spot here to get a pullback. Now, I don't think we're going to roll right over and retest these lows. I'm not putting it out of the question like, yeah, there's no way we're going to do that. Look, and I know you're going to say, well, you should never do that, right? But there are times where you always leave yourself a chance for something to happen, and then there are times when you're pretty confident. I'm not pretty confident that we're going to just go higher here. I'm pretty confident that the next pullback will offer a buying opportunity. But, of course, news will definitely change that for me, and I'm not just going to sit here and look to pick a bottom. I don't like to use levels to get in. I like to use levels and then a pattern around those levels in order to get in, whether it's on the daily chart or intraday, whatever you want to use. Now, if you're a day trader or a swing trader. Now, right here, this is non-commitment here. Yeah, Thursday we did get the gap up and we did close higher than we did after the reversal candle, but we can't drive it through right here. So what I want to see is I want to see the market right here pull back like a slingshot and go through, like pretend you got the Roadrunner on or Wile E. Coyote on one of those slingshots and he's pulling back and trying to rip it through. Or I want to just see us pause here a little bit, which would probably be the stronger of the two if they can't pull it back at all, and then try to lift through it. What I don't want to see is a push up here and then just another shot through it here without a wind up, because that would make me nervous. I'm not saying that it has to be faded, but a market tends to work its way in a directional manner when it stair steps, and is more solid when it stair steps than when it just gets ahead of itself. All right, so I'm still not back in the camp of we're going to test the highs on the year into the end of the year. I'm getting there, but we really have to get through this. A lot of bears out here saying this is just a correction and this started a downtrend, but like I showed everybody last week, and I'll show you again, the weekly chart is still in an uptrend. Okay, the bigger time frame is still in an uptrend. So right here, this is what I call a key decision area, also known as an inflection point. Something is going to happen here. We're likely not going to stay here. And the longer we do stay here, the better of a chance, in my opinion, that we go higher. Okay, here's the Dow. Kind of the same, but some more space between the 50-day here, obviously, right? The S&P was testing its 50-day. The Dow is below it, but the same type of pattern. Let's see if they could get through. Good close back above the 200-day after spending a couple of weeks below it. The Qs above their 200-day also, yeah, just barely. But look at this. This is like a squeeze coming here, right? The 50-day is coming on top. The 200-day is coming on the bottom. And this is going to release. This is going to release one way or the other. Will it be to the upside or the downside? You know, obviously, it's going to be hard for the NASDAQ to go one way with the market, with the broad market going the other way. So more than likely, if it releases the squeeze, this little moving average squeeze here to the upside, that'll be with the market. Now the Russell, okay, up above all its moving averages. So this is actually the only one of the four majors that I would call completely bullish here because it's above the moving averages. Again, it's extended. I'd love a pullback here to fill this gap, maybe even get these moving averages and do the Wile E. Coyote slingshot kind of move. But the fact that it's over the moving averages, you know, I cannot be bearishly biased, right? The other indexes are more neutral than anything, especially something like the NASDAQ, which is sitting right between those two key moving averages. But look at this here. This is, I mean, we broke this trend line here. Now, of course, it can come back down, but if it comes back down and kisses it, it may be an opportunity to sell some put spreads or to pick up some IWM calls. We are in that time of year where the small caps will usually outperform the large caps, okay? This January effect type small cap outperformance, all right? So keep your eye on this. This may offer a really nice opportunity here, okay? And of course, if it just whizzes through it and just rolls on over and we're back into this downtrend, then you gotta, you know, make adjustments, okay? I'm not sitting here saying we're definitely going higher, all right? I am bullish because we're over the moving averages, but one trip back down puts me back to neutral, but watching, okay? So, you know, that's what I'm looking at as far as the major indexes. Now, some of the sectors are starting to shape up as well. The semiconductors over the 50-day, yeah, not by much, but look how they're holding here. Showing some signs of life there, which is good. Here's Cladtenka. I mean, got to get over the 50-day, otherwise not really looking that great. Intel, I think Intel could be setting up for a fantastic January effect trade. Also, this is a possible W pattern here, so watch this. This may be looking for a potential bounce. If, of course, if the market, the NASDAQ, the semiconductors go, watch Intel. Could get a lift up to the 20 EMA or maybe even the 50. And if not, like I said, could offer a great opportunity for a January effect stock. How about NVIDIA? Yeah, not really doing anything there. Broadcom, again, still under the 50-day, so I can't really get that excited, but I like the way this put in the high or low here. All right, financials. Let's start with the XLF, and then we'll go to the banks and the brokers. Somebody asked me if I could look at the XLF every week, so I'm going to start adding that in, and I really appreciate the recommendation. Your feedback is always welcome. I never get mad, even if you criticize me, okay? Even my accent, my wonderful accent. So you see here, what is this pattern? Well, we're coiled up right on top of the moving averages here. We're above the 200-day. We are below the 50-day, but look how we're testing it and not getting the rejection. We're not seeing responsive selling here. So, again, it's a little too premature to just jump on in unless you want to do it with, you know, a low risk or more than likely a defined risk trade, like a call option or something that you know exactly what you're going to lose and you don't have to manage it if it goes against you. But something like this, you know, you wait to see if it can break out here. I mean, there's resistance here from a gap fill at 1601, and then you got the highs up here at 1644. So that's the XLF. Now, if we look at some of the financial sectors here, here's the banks, also in a nice coil here, looking like a nice coil. Again, under the 50-day, so can't get super bullish excited. And of course, all a coil does is bring the market down to a point of equilibrium. It could easily pull back just as easily as it can go higher. But obviously, if the XLF breaks, it's going to do it with the banks. Bank of America looking nice, got to get over $10, but this could be an end-of-year window dressing type play. So watch Bank of America. JP Morgan, banging its head against the 50, 1, 2, 3, 4, 5 times. See if it could break out there. Northern Trust, more range bound than anything. How about a Zion? Zion Banks, yeah. I mean, more neutral than anything, but it's looking more bearish than neutral. I just can't get biased bearish because it's back over the 200-day. How about Citigroup? Yeah, I mean, under the 50, so this is more neutral, but so far this pullback hasn't really done a lot of damage. We're just coming back to the last breakout, which we highlighted a few weeks ago, this nice pullback here. So let me get this done and then see if I can. There we go. All right. Sorry about that. I have a cold. It could be a potential topping pattern, but for now it's holding support. How about the brokers? Okay, range bound more than anything, and really has to clear that 200-day before you can call it bullish. But not horrible. Not back down at the lows. The higher low, that's a good sign, but it's got to get above that 200-day. Goldman. Coiled up here. I would love to tell you, it's not looking terrible. I mean, I will say it's not looking terrible. I'd love to tell you that it's looking bullish. It's really not looking bullish to me. But obviously the coil brings the market down, so you got to wait for a move either way here. Here's Morgan. I mean, same thing. Really stuck right on top of those key moving averages, right below the 50-day. It's got to release to the upside there. Cyclicals, okay, yeah, looking okay here. I like the cyclicals. I like when the cyclicals act well. They're not a day trading group usually, but this is where the funds tend to layer their stocks into the quote unquote safer stocks. I mean, I don't believe there is anything that's safe as far as stocks go, but it's just something to look at. Okay, let's have it the XLB. Yeah, I mean, back over the 50-day, over the moving averages, but it definitely has its work to be done. Could draw in a little channel here. Okay, what about the biotechs? Biotechs, okay, back above the moving averages. See if they bring anything out. How about home builders? After this loop-de-loop down to 150, right back up here. So another group that you could watch for end-of-year window dressing as well. Stocks in the home builders, you got BZH. Yeah, not the most bullish looking stock here under the moving averages, so that's probably not a good one. CTX, a little sloppy. Hovnanian, KHOV, cheapy. Try to get a pattern on this. Speaking of cheapies, everybody see what that ODP is doing lately? Wow, just a monster. Talk about it on my in the list. Still think it has a chance to get to the yearly highs. And if we run the fib, you can see here, right, that we're right at a key level. So if it can lift from here, the next target would be those yearly highs. I don't own any, so there's no front running here, pump and dumping, anything like that going on. All right. Healthcare, more choppy than anything. Yeah, I mean, over the moving averages, but come on, they're more flat than anything there. How about gold? Gold broke out beautifully last week, and then look, right back down. This is GLD. Definitely something to pay attention to here. Silver didn't lose the breakout yet, but it broke. It actually went a little bit higher Thursday than the breakout was, and then it came back. So definitely something to pay attention to if that's a fake out. That's going to hook some people. Oil not doing much here. It's kind of chopping around. How about a stock like Exxon? Okay, stock like Exxon, you got a pattern there. It's a little sloppy, but I think I could get a better coil if I go in here, cutting through some of the this big candle here. So let's see if it could do something. Let's look at some glamour stocks. Then I have one I also want to watch. Look at Apple. Apple is coiling up here. Notice the overlapping action here with the doji. This one is definitely one to watch. I mean, that's a little bit, it's always one to watch, right? Because this one can move. But I mean, the fact that it's coiling up here right below the 200-day. Let's see if it can get through that, test the 50. or roll over here. How about Google? 50-day moving average. See if that gets tested. This was a gorgeous reversal at the 200-day moving average. Baidu. Yeah, Baidu looks more bearish than anything. What else am I looking for? Priceline. Yeah, Priceline. Last week I talked about this one being sloppy, but I mean it got over its moving averages, but this is in no way you could say, oh, this is in an uptrend. It's more choppy than anything. CMG looks bearish. This is Chipotle Mexican. This looks like it wants to fall out here. See if it does. Research in motion. Boy, what a nice move here after breaking. Don't know how far it's going to get, but it's a good cheapie up here. See if we can get to $15. Amazon. Yeah, on its way here after testing the 200-day. Target would be new highs. Of course, pullback, like I said, nice slingshot type of trade. In my opinion, I think if the market pulls back, and some of these key stocks get those nice pullbacks, those nice stretches to the downside that don't kill it and, go right back down to those lows, but nice pullback here into key support, maybe get a reversal either intraday or on the daily chart. Could be really nice opportunities for some end-of-year markups. Got a few questions on Dell. So let's look at Dell in detail here a little bit. A couple of people wrote me about this, and what do you think of Dell here? Now, the stock's been beaten up all year, so it's a pretty nice stock to watch for a potential January effect trade. The only problem is it's kicking up early. Right? January effect doesn't really take place until around Christmas time, towards the end of the month. But this is a nice looking pattern here if it can get going out of this. All right, $10 obviously stiff resistance, and then you got next resistance up here at 1087 if this could get going. Then of course the big line is going to be this 1139 because that's where it broke down from. So keep your eye on Dell. It could be a nice cheapie. Like I said, there's renewed interest in it. I don't know, maybe they think because of holiday shopping or something that it's going to start going. I don't know. But anyway, that's one to keep your eye on. IBM, yeah, not really looking so hot here. Not really looking great. Adobe, that's the one I wanted to show everybody. Adobe looks like to me it could be on the verge of a nice breakout here. Now I can draw the trend lines in right here. Right. Oops. All right. So this is a weekly chart, and it is coiled up here. It's been coiling up basically all year here. So if this can release to the upside here, could get a really nice shot up to this 3820 level. And then, of course, you have these highs to watch as well. But Adobe, I mean, I wouldn't call it a cup and handle, but it's definitely coiled up here on the weekly chart. So definitely one to watch. What else we got? Let's do Las Vegas Sands. Under the 200-day, so it's got to get above that 200-day to get going. Wynn Resorts, back to these moving averages. Got to get through this, but if it does, may fill the gap into the end of the year. Potash, it looks more bearish than anything to me. Looks like this is a corrective move up for a rotation back down to test those lows. Monsanto, yeah, acted okay here at new highs, but see what happens on a pullback. Looks like maybe losing some steam up here. So, what else? Nike I wanted to look at. Okay, let's look at Nike. Nike is setting up in it's set up in a range. Not setting up. It's set up. Let me grab the 200-day more. There you go. It's set up in a range here, and it's pulling back. So this may want to play a little what I call moving average ping pong. It may want to go down to the 50. If you see that it's holding there, it may want to rotate back up to the 200 and go back and forth until it finally decides to break. You got a little double bottom here, W, whatever you want to call it. It broke up. So now if it can hold this pullback here, maybe an opportunity to range trade it. All right, so again, we are at key resistance here. The Russell is above the moving averages. The only one I would classify as bullish. The others, the other four I'd classify as neutral. I'd like to see a pullback here, like a Wile E. Coyote type slingshot trade, right? When they pull back, hold support, then go and get through it. But it would be more bullish if they stayed here for a couple of more bars, a couple of days, and then finally tried to break through it. I think it's overbought. That's why I'd like to see a rest. But of course, I'm not going to be bullish if it just rolls on over and just slices through these moving averages and keeps going down. It should make great day trading volatility, but to get to those highs, which I'm not yet back on that, hey, I think we're going to test the highs yet. I'd love to see, like I said, a pause here or a pullback. And from there, then we could see if we could move it out higher into the end of the year. So that's it. Thanks a lot for joining me. What do you think of my big red arrow, by the way? I just installed this. I think it's nice. I think it highlights stuff better. But let me know. Leave comments or email me. And any questions, tiny@stockmarkettrendsx.com. Have a great week. I will talk to you again in next week's video or in the daily email.